We've got a trial balance at the 30th of June 2017, and today's question is, how do I close the general ledger for this question? And this question's been submitted by Chulin. What we need to remember is that the procedure for closing the general ledger has 5 steps. Step 1, close all revenue accounts together. Step 2, all expense accounts are closed together. Step 3, close the profit and loss summary account to the capital account. Step 4, close drawings to the capital account. And step 5 sometimes isn't actually part of the question, but it's just good procedure. If we've been given a ledger, we're going to balance the capital account for the next period. Let's look at that with the information we've been given. Step 1, all revenue accounts are closed together. What we've got is a big trial balance there. Which ones are the revenues? Well, to help us figure that out, we can remember that a revenue, for example, cash sales, does it go up as a debit or a credit? If we've remembered our rules of double entry accounting, we've remembered that all revenues would go up on the credit side. So that means in the trial balance, we only need to look on the credit side for step 1, all revenue accounts are closed together. Let's go through this list one at a time and pick out the revenues on those credit balances. So we've got cash sales, obviously, is a revenue. So is credit sales. Investment income is a revenue, and investment itself is an asset that would have a debit balance, but this is the income from it. Discount revenue obviously has the word revenue in the title, so that's a revenue. So is a stock gain. And then that leaves us with 3 at the bottom. Creditors' control is not a revenue, it's just a liability. Likewise, so is a loan. And capital is a representation of the owner's equity of the business. It's not a revenue. So all we have are the 5 revenue accounts in green. Step 1 says, close those. What does that look like? Well, basically we've got 5 ledgers with credit balances for all the revenue accounts. We're going to close those to a new ledger. It exists for 1 day only. It's called profit and loss summary, and all it's for is to put the balance of everything else on balance day so we can calculate our profit. To do that, we're going to do it in the general journal. So to close each of these revenue accounts, they've got credit balances, so we'll need to do a debit. So for example, cash sales, we need to do a debit of $250,000. Credit sales, we do a debit of $150,000. Investment income, a debit of $10,000. Discount revenue, a debit of 5. Stock gain, a debit of 5. And lastly, what we do is we post that all as one giant total to the profit and loss summary account, which if we add all those numbers up, we've got total revenues of $420,000. We haven't been asked to do, we're just doing the general journal for this question, but if we were doing the ledgers, we're making sure our references reference each other. So we've got profit and loss summary for all the debits referencing this account. And here we just write revenue accounts to reference all of these. That's step 1, all the revenues are closed. Step 2 says close all expenses. So we've already done all the revenues. So what we want to do with our trial balance is tick off the things we've already used. So we've already used cash sales, credit sales, and so on. So tick them off. So it just leaves us with fewer options to choose from. So now we're going to look at expenses. Expenses go up on the debit side. So that means we're only going to choose from the ones in green on the debit side of the trial balance. Looking at the example of wages, so wages went up as a debit of $75,000. So let's now go through the list of those accounts one by one and figure out which ones are expenses. So the first one is cost of sales, which is the expense of sacrificing stock to make a sale. So we're going to need to close that one. We've got wages are an expense, discount expense, obviously. Administration expenses, we'll need to close that one. Rent is an expense, advertising is an expense, and then we get to the remaining debits. We've got bank, that is not an expense, it's got a debit balance, but that's because it's an asset. Same with stock control and debtors control. And lastly, we have drawings, which we're actually going to deal with when we do step 4. So really, the only 6 expenses we need to close are the 6 that we can see in green there. How do we do that? Well, we've got a bunch of ledgers with debit balances, all these expenses, and we're going to use this profit and loss summary account again. And to close them, we're going to use the general journal. So to close the first expense, cost of sales, it's got a debit balance. We'll need to do a credit of $160,000. Same with wages, we'll do a credit. Discount expense, credit. Administration expense, credit. Rent, credit. Advertising, credit. And then what we'll do is one giant debit to the profit and loss summary account for $310,000. So all our expenses are now reset to zero at the end of this period, and we sent them to a special ledger called the profit and loss summary account. Step 3 says close the profit and loss summary account to the capital account. That's a fancy way of saying what we're going to do is figure out how much our profit is and transfer that to capital. Looking at this example, so far we've got a profit and loss summary account with a credit entry for all the revenues of $420,000 and a debit entry for all the expenses of $310,000. We've also got from the original trial balance, capital has a credit balance of $140,000. So that's how much our capital account is at this point. We are now going to figure out the profit. So we had $420,000 in revenues, less $310,000 of expenses, equals a net profit of $110,000. What we're going to do in the general journal is close that to the profit and loss summary. It's going to be a debit there. And why is it a debit? It's a debit because this profit and loss summary account can't exist after balance day, in this case the 30th of June. We've got to close it down, so that means it's going to be a debit to get both sides to equal $420,000. The other way to remember it was, well, the entry into capital will be a credit because we've made a profit. That would make capital or owner's equity go up. So if it's going to be a credit in the capital ledger, it's going to be a debit in the profit and loss summary ledger. That's now step 3. We've closed the profit and loss summary account to the capital account. Step 4, close drawings to the capital account. So that was one we left in the trial balance. We hadn't done anything with it yet. We saved that for step 4. So we've got a capital account that began at $140,000, the opening balance. It's gone up because we made a profit of $110,000, but we've also got from the trial balance a drawings account with a debit balance of $5,000. What drawings are is they represent the owner withdrawing their capital from the business. So we need to close that in the general journal, and we're going to close drawings to the capital account. How are we going to do that? Well, drawings will make capital go down, so we'll do a debit there, and then we'll do a credit to drawings, which closes that drawings account and resets it back to zero. Step 5, sometimes is part of the question, sometimes is not. In this case, we're going to do it. It says balance. It could consider it to be part of step 4 as well, depending on the question. I usually consider it as part of step 5, a separate thing to remember. And what we're going to do is balance the capital account for next period. What we've got is a capital ledger with all those entries in it. We're going to balance that by adding up which side's the biggest side. We've got the credit side there has more on it. If we total it up, it's $250,000. We'll write that on the debit side, and then we'll subtract away the $5,000 of drawings, and we'll get a balance going forward of $245,000. And then we better remember to carry that forward on the 1st of July for the next period. And there we go. We've done all 5 steps of the closing procedure. All that's ever going to change is maybe the numbers that go into it. We might have to calculate and make some adjustments ourselves. But if you can remember the 5 steps, the difficulty of doing this becomes a lot easier because you can always remember the procedure.